guess the policy will hold the key for the day. So to talk about that, Ashwini Agarwal of Demeter Advisors has joined in now. Morning, Ashwini. Thanks for joining in. What are you expecting to hear? 25 or 50 bips today?
I think, 2 weeks ago, by and large, everybody was at 25 basis points increase on the rates. But now I think the consensus has gradually shifted to about a 50 basis point increase for the simple reason that the last two inflation readings have actually been quite robust. So that's caused a fear in the marketplace that the RBI would have to tighten much more than what they were anticipating earlier. The key question is that will RBI continue with its trend of just doing a 25 basis point increase, and if they do that, my fear is that it actually might be perceived a little bit negatively because the inflation readings are actually quite bad, and I think the RBI may have no option but to look at 50 basis points, and that's where the consensus is right now.
Ashwini, morning. So you're saying that the market may have actually adjusted for a 50 bips move and will read that as positive rather than 25 bips action?
I think so, because the question is that will the RBI continue to be perceived to being behind the curve? I mean that's one of the sort of criticisms that has been faced by the Reserve Bank of India through 2010, that has it been a little bit behind the curve in tightening. There are differing views on that, obviously. A lot of people feel that there is only a limited amount that the RBI can do, given that the inflation is driven by factors which are completely beyond RBI's control, like food prices or international commodity prices. But I think the reason why I think a 50 basis point increase is merited right now is because the core inflation is starting to look up. It's manufacturing inflation which is starting to look up, which is why the RBI may seem more keen to curb demand a little bit. So that's at least what I'm looking at the moment. So if I think that core inflation is a worry, and I don't see RBI raising rates by 50 basis points, I'd be worried as to whether we get into a situation where it will lead to a lot of tightening later on down the year.
Do you worry though on where that leaves growth and by extension earnings to live with those kind of elevated interest rates?
You're right. It's not a pretty picture. I mean, at the start of the year, I was hoping that whatever tightening will happen in India will be restricted to the first quarter or so, and after that, inflation data will fall off. But obviously, events in the Middle East, in North Africa, and the unfortunate earthquake in Japan have put paid to expectations of softer energy prices. One. Number two is that it seems that the West is in no mood to let up on the liquidity front. So you put these two things together, and the view that you come to is that the commodity prices are likely to remain stronger for longer. In face of this, and the fact that inflation is running at 10% or higher, once you take into account that previous figures have consistently been revised upward, and the real inflation is probably in the region of about 10% or so on the WPI. My sense is that some slowdown in the economy is to happen. We've already been seeing some downgrades in GDP growth estimates from a lot of economists who were at 8.2, 8.3 earlier, revising down to 8, or some are even below 8. And I think something like 7.5 to 7.75% real GDP growth for fiscal 12 is probably not too off the mark. It may turn out to be even slower than that if inflation doesn't come off, and a 7.5 to 7.75% GDP growth in real terms would assume a normal monsoon and would assume that inflation starts to actually taper off around Diwali or so. But if that doesn't happen, then we are probably looking at even a slower picture. But then you can see that already in terms of what's happening to footfalls in car showrooms, what's happening to discounts on automobiles, what's happening to cement movement. I mean, these are some of the early indicators, but there is some slowdown which is underway, which is visible.
What next then, Ashwini? Once we are through past this event now and we've seen a lot of the earnings trickle in already, what's the next trigger for the market? Do you think the assembly election results on the 13th of May could have any bearing on the market at all?
Well, I think to a certain extent the consensus for the last couple of years now, ever since the last general elections, has been that there is nothing that can prevent the Congress's term from coming to an end before 2014. Also, the consensus is that Congress is in a very good position at the center, and they will be able to push through the policy reforms they require. To the extent that they win West Bengal and they win Kerala, these assumptions will turn out to be right. However, if there is a surprise on either West Bengal or Kerala, or if the win turns out to be not an unconditional win, I think then we have a serious problem, because the government is already under significant amount of pressure at the center on account of various allegations and scandals that are being investigated into. The opposition's voice is already quite shrill. So if the Congress is seen to be faring less than what everyone expects, then I think that will put Congress on the back foot at the center, which might create a lot of problems for the market. I mean, I'm not hoping for that outcome, and I'm not saying that this is a certain outcome, but this is a possibility that we should not forget about.
Ashwini, last time we spoke a few months back, you said for the year the Nifty would probably be in a range of 5,300 to 6,000. So far that's worked out very well, but would you now, in the light of new data, want to recalibrate that trading range?
Udin, I did say that, but I also said that Q1 would be the worst quarter in 2011 calendar, and after that things should stabilize. And the assumptions I had made was that inflation would come off and growth would remain very robust. Now, two of those assumptions are turning out for the worse. Inflation is turning out to be higher than what I had thought at the start of the year, and growth is probably going to turn out to be a shade below what I had thought at the start of the year. So if you adjust for that, I would say that there would be a marginal downgrade to my trading range. Whether it's 4,800, 4,900 as the bottom or 5,000 as the bottom is very difficult to tell. But I'm not as happy sitting here at the end of April as I had hoped to be when I spoke to you last in January and February beginning, which is when we last spoke. So net, the events that have unfolded over the last 3 to 4 months have been less positive than I had hoped for. So there would be a marginal downtick in my outlook for the marketplace.